What's going on, YouTube? Welcome to another edition of Insightful Principles. My name is Kevin Jenkins, and this is episode 38. And within this episode, I want to talk about why investing in gold is smart. Now, when it comes to gold, it has been here since the beginning of time. And it also is a commodity that gives a hedge against inflation. Now, before I go further, I did want to say if you all could please subscribe, like, and share this video, that would be greatly appreciated. Now, one of the main reasons why I say investing in gold is smart is because it is a store of value when a dollar devalues. Now, the US dollar is one of the most well-known reserve currencies here in the US. However, if we have a financial crisis similar to what happened in 2008, the dollar fell tremendously against other currencies, and this will often prompt people to purchase gold. Now, that's why I say a lot of people tend to like Bitcoin, because it's a hedge against our current US dollar now at the moment. Now, with everything going on in the economy and also with the stimulus checks that have been given at a high level last year, there's also talks of a potential stimulus check coming for this year. It really shows that as they pump more money into the economy, as more money is being printed from the government, the more valuable that you will see gold and Bitcoin will become. Now, when it comes to gold, it's a way to preserve your wealth from one generation to the next. And gold has maintained its value over the ages, and it's also looked at as an insurance policy with our current financial monetary system. Now, just think about this. An ounce of gold today is priced at $1,854.90. 4 years ago in 2017, it was priced at $1,240. So that goes to show you the growth of gold and how it has been able to build in its value over time. Now, like I mentioned earlier, gold, it is a great hedge against inflation, because the price of gold increases when the cost of living increases. So what I mean by that is a higher cost of expenses and a decrease in the purchasing value of money is what leads to inflation. Now, gold also, it has deflation protection, and deflation is when prices decrease when business activity slows and when the economy is burdened by excessive debt. And we could say at this moment we could be moving towards deflation, because the economy has a lot of debt. When you look at student loan debt, I believe it's like 1.7 trillion. It's the highest debt category when you compare it to mortgage loans, mortgage debt, car debt, auto loan debt. So we definitely could be heading into that territory. And with everything, with COVID still happening, business activity is still slow. It's not at its maximum capacity like it was early last year or even 2 years ago. Now, when it comes to deflation, this hasn't been seen since the Great Depression of the 1930s. And during the Depression, gold prices has soared and other prices dropped significantly, such as the stock market, real estate. It dropped significantly. And one of the main reasons is because people, they kept cash, and one of the safest ways to keep cash at that time was to invest in gold. Now, geopolitical uncertainty is also another reason why investing in gold is a smart move. Gold usually retains its value in not only financial uncertainty, but in geopolitical uncertainty as well. And people will tend to move to this commodity when the world tensions are high. So, for instance, like, when you have issues like between Saudi Arabia or Iran, that might affect the price of oil. Or even think of when we recently had tensions with the US and China from a security standpoint, and where all of that news media was projected around TikTok, and how it could really affect the privacy and the security of Americans. Those type of intentions, when it comes to gold, is really not affected by geopolitical uncertainty. So during these times, gold often outperforms other asset classes. And when the confidence also with the government is low, which I would say is definitely at a low right now, the price usually rises for gold. So those are some things to keep in mind of when you think about geopolitical uncertainty. Now, the increasing demand for gold is also another reason why you should invest. Now, in recent years, emerging market economies have boosted the demand of gold. In some countries, gold is also immersed in the culture. For example, India is actually one of the largest gold consuming countries in the world. And one of their main uses for it is jewelry. Also, with their wedding season during October of every year, they tend to use gold a lot for those ceremonies. And in China, gold bars are actually usually used for saving. So it definitely shows you that just not here in the US, but in other countries as well, they really see the value of gold. Now, the demand for gold has also grown tremendously amongst investors here in the US. Many are allocating commodities as a percentage in their portfolio, and commodities could be also silver, any type of precious metal, platinum, and all of those different things can also be included when it comes to precious metals. Now, the SBDR Gold Trust, it actually became one of the largest ETFs in the US, and it also is one of the largest holders of gold bullion in 2008. And gold bullion is usually produced in the form of gold coins, bars, and also precious metals around the world. Now, investing in gold, it also presents portfolio diversification. And the purpose of diversification is you want to find investments that are not correlated to each other. So gold over time, it presents a negative correlation in a comparison to stocks and other financial instruments. It moves in the opposite of those other asset classes. And a properly diverse portfolio combined with stocks, gold, and even alternative assets such as crypto can help with reducing the overall volatility and risk with your portfolio. Now, all of the reasons here that I've listed within this episode is why you should look at owning gold. Like I said, its price increases in the result of when events can cause other paper investments such as stocks and bonds to decline. It moves from an opposite direction with a negative correlation and compared to those other financial instruments. And then also the price of gold, it can be volatile in the short term, but if you hold it over the long term period of time, 20 years, 30 years, it does sustain its value. So my biggest question for my audience here that's watching is, what assets do you currently have in your portfolio that hedge against the US dollar? Because the US dollar has become devalued over these recent years, and it's definitely a conversation that you need to be asking yourself so you can be able to properly rebalance your portfolio to be able to prepare for the unexpected that may happen within our economy. Now, if you all can please continue to like, subscribe, and share this video, I would greatly appreciate it. Also, if you can support my Patreon page where I create exclusive content in the areas of creative investing, personal finance, and also business, I will put the link tree here in the notes. I do have 3 tiers, and in tier 3, I actually have a tier for financial planning success, where monthly I'll do one-on-one Zoom calls. We can kind of get on camera. You can learn more about me. We can have a conversation about anything such as retirement planning, estate planning, insurance planning, cash flow, investment, any of those different areas. And also I have a mastermind group as well in my tier 2, where I'm collaborating with other entrepreneurs and business owners, and we're being able to share knowledge and share gems, being able to educate people and really being able to create a blueprint when it comes to financial freedom. So I want to tell you all, thank you so much for tuning in to another episode of Insightful Principles, and take care.